Hey traders from around the world, holla at your boy. It's Jeremy Alexander with Real Life Trading. Hope you have an absolutely fantastic weekend. So we are checking out the SPY, and this is the post Hillary Clinton Donald Trump debate number 2 gap. And realistically though, the SPY, shockingly as it may be, is still intrinsically and very sideways. Still in the pennant. It is really mind-blowing that we're still in this thing, and looks like I'll probably lose the wager, which I had a wager that if SPY did not get below 211 by the 1st of November, that I have to shave my head into a mohawk. So this gap up today is, on the SPY, more bullish than bearish for sure. So we'll be keeping my eye out for a bullish break, but really folks, I am very, very neutral. Some of you may have noticed that if you are in the Q's trade from the weekly options newsletter, we did get stopped out today, and folks, there's nothing you can do about that gap right there. I gotta say though, fantastic risk mitigation. The best way I can sum up the risk mitigation is by reading my note from Bob up here, my good buddy Bob. Let me keep scrolling. He goes, Jeremy, are out of the Q's option trade, so on and so forth. I was like, yes, sir. I got stopped out at 40 cents per our plan. He goes, okay, that's what I did. Lost less than anticipated risk because of lower entry. Remember, so we did a limit buy in our options newsletters. We got triggered in at about 88 cents and our stop was 40. So we did lose about 0.8 R. But ladies and gentlemen, that's absolutely okay. I will say right now that there will be losers, regardless of any strategy, any options newsletter, any program, anything you sign up for, there will be losing trades. The goal is to lose as small as possible, right? I mentioned on Friday in the afternoon trading recording that we're either going to bounce bullish or bearish based on that lower shadow, and of course we did in fact bounce bullish. From here, what do I think is going to happen? Based on this gap, we probably keep going up. This is a pretty good gap. I think 120.50 is a good resistance, and I will be posting a new weekly options newsletter tomorrow, which is Tuesday. For all those who are subscribing to the options newsletter, there will be a new trade set up, and hopefully that one will be profitable. So that's the Qs, that's the SPY, and here is Apple. Ladies and gentlemen, Apple today, looking beautiful. I did want to say that this particular covered call mentioned in the new fall options newsletter, the new fall real life trading portfolio that went out yesterday and is on the website. If you got a chance to read it, I talked about Apple down here, that I'd be likely buying back this covered call for less than 66 cents. So that did go through today. Had a few traders purchase for about 12 cents on that covered call. So bottom line, sold at 66, bought back at 12. No upside limit at this point. There are a few traders still in the 120 January calls on Apple that I've been talking about really this entire time. I love the gap on Apple, ladies and gentlemen. This is extremely bullish, and really any pullback, in my opinion, is viable, and I'd like to see Apple continue higher into earnings. I think that's exactly what it does. I love everything about Apple's gap today. It's absolutely phenomenal. You know what I don't love? The gap on Twitter. Good Googa Mooga. This thing gapped down large over the last 4 days. Huge run up. Everyone in the world want a piece of this action, and then boom, giant bearish gap down. Huge trap on the 6th of October. That was on Thursday, and a few traders did get a little bit of bearish piece of that action yesterday, inside a candle, and then today another gap down. So right now we got a high wave candle on Twitter. I really truly do not know what it's going to do, but what I can say is, since it is sold off so far and you're getting an indecision candle at a long-term moving average, if it breaks below, bearish. If it breaks up, bullish. Twitter has sold off very far since 24, and whoever didn't get in on this bullish run since really mid-June, they might say to themselves, oh man, this is a good time to buy, because right, they're streaming the debates, they're streaming Thursday Night Football. Maybe people want to get in on Twitter thinking it might get bought out by another company other than Salesforce or something. So I guess we'll just kind of have to see on Twitter, but overall, right now, it's a nice bracket trade per today. One other gap, here is CRM, and this is one I got. Oh boy, gotta give a shout out to Latoya. Latoya, who she had a great introduction webinar on Thursday last week. Today, she did an amazing day trade on Salesforce from this bullish gap and go on a 1 minute time frame, and literally picked the top of this trade like she is a sorceress. It was amazing. Here's the entry on CRM. We made this an official trade. Stop right there. Target 1. I believe was right here in blue, and then target 2 is 75.22, which was this pink line. So she traded as good as it could have been traded. Over 3 Rs on the day on Salesforce, so a lot of people very, very happy about that one. Absolutely phenomenally lovely bullish gap and go off of this high wave candle at a support. So what now, Newsom? Well, now Salesforce is battling the 200 simple moving average, which really is going to battle for a while. I'm looking for this, and something like that. So let it break higher, pull back a little bit, and then look to buy a short-term dip, maybe on the hourly chart. But overall, it does look more bullish than bearish. So Jaden, Latoya, all those who got opportunity to trade this one bullish, congratulations. Gotta give a shout out to my boy Dan Walsh also, who just absolutely murdered Twitter and Apple today. Great job, Dan. Here's BMY, Bristol Myers Squibb, and this was another trade. We did try to take a bearish day trade on this one and got out for break even. Just simply didn't really move as good as I wanted it to. Very nice gap on Bristol Myers. And folks, this stock has moved very, very far for a dividend paying blue chip pharmaceutical company. From 76 to 50 is a $25 sell-off. That is huge. So as it's trading into the support, $47.47, for anyone who wants to go long, this does appear to be the price that I would like to buy it on a longer term type of trading opportunity, and also could be a good shortable trade into that area, or a short-term bullish bounce off of that support. Bristol Myers is one that we are also tracking in the fall portfolio. Last but not least, here's Solar City for the day. Ticker symbol SCTY, and this one snagged me by a few pennies the other day. This one, a lot of traders were tracking as it bounced off of this support. It closed above our trigger on the 20th of September. We had a nice high wave candle right there, moved the stop above there, and got stopped out for a very, very, very minute gain yesterday being Friday, and then today another nice white candle. So if you are still in bullish on Solar City, fantastic, congratulations. I really do like this candle, and I would say it probably is a good time to at least move the top up a little bit. Stan's got himself a $16 put sale for October, and that should expire just fine. Happy Canadian Thanksgiving for my beautiful neighbors to the north. Ladies and gentlemen, thanks so much for watching this Monday Real Life Stock Review. That's all the requests that I had. If you guys want to request any other stocks for me to look at from Wednesday's Real Life Stock Review, put them in the comment section below. Email me, jeremy@reallifetraining.com. Message me on Twitter, and some nuggets, LinkedIn, Facebook, we're everywhere. Ladies and gentlemen, you guys absolutely rock. I'll see you later, and until next time, love life, live life, and trade it. Bye-bye.